Hello everyone, I'm Massimiliano Silenzi and I'm going to be your moderator for today's session, which is hosted by The Papers. Our topic is the rise of stablecoin payments. We want to understand where we are today and what is next in this space. To discuss this, we have some truly amazing guests. But before I introduce our panel, allow me to introduce myself 1 second. I'm an executive and entrepreneur in payment technologies. I've been so for about 20 years. I'm currently the founder and CEO of Cryptorefills, for a crypto commerce platform that allows people all over the world to purchase flights, hotels, gift cards, and many other products, paying with cryptocurrency and stablecoins. I think one of the reasons the papers invited me to moderate it is that in Cryptorefills we have visibility through the different layers of the crypto payment stack. So we're both a merchant and process our own payments. So that gives us different angles of view. But I think that our panelists have some very specific points of view, and they're going to contribute a lot to this session. So joining me today, we're going to start from Eric Barbier. He's the CEO of AAA, where he has empowered over 20,000 businesses in 120 countries to accept stablecoin payments. Eric is a serial entrepreneur. He's in the payment space. He's founded and led companies such as Transfer2, which is now DT1, and Tunes. Tunes is very well known, of course, in fintech, and Mobile365, which was acquired by SAP. So welcome, Eric. We have Rivai. Rivai is a veteran and OG of Southeast Asia's internet and digital content industry. He began his career at Pacific Internet, which was the region's first Nasdaq-listed ISP. He now leads the business development for Razer Gold, driving payments and monetization for online games. My paths crossed with Rivai in 2010 when he was, I guess, payments director at Money Online. So it's really interesting to have, also because he's in the gaming space, which is usually the earliest adopters of new payment technologies. We have Irina. Irina is head of compliance at Crystal, bringing deep expertise in stablecoin regulation. She's had leadership roles in the compliance industry and served also as a compliance officer within regulated financial and crypto institutions such as Bitstamp. So Irina brings us the perspective, both the operator and the advisory in compliance. We have quite a few topics that we're going to try to cover in our 1-hour session today. We want to understand how the why and the how these crypto payments work. We want to try to get some real merchant cases, especially from Rivai. We want to understand some of the technicalities such as cost and settlement speeds. And we want to also understand what is next in 2026. Before we start, just a couple of other points. We're going to have a Q&A session towards the end, so you can start already asking your questions in the Q&A section. The other one is the papers publishes a payments acceptance report, and I think that it is very good. There's contributions also from some of the people here in this panel, so there's a lot of interesting stuff, and you'll find it in the handouts. So to set the stage, I'd like to start with the why of crypto payments. I would probably start from Rivai, because you're a merchant that is actually accepting this. Oh, I see I see. I see Damon joining as Eric.
Unbelievable. Hey guys, I apologize.
So then allow me to introduce, because this is a bit last minute, there's a change, okay? Allow me to introduce Damon, even if you appear as Eric in that link. So we have...
Sorry about that.
So we have Damon. Absolutely no problem. We have Damon. He has 20 years of experience in management, consulting, fintech payments. He's held leadership positions in some companies that you may have heard of, such as Adyen, Visa, and Binance. So you've seen a bit of everything, Damon, right? From the more traditional side and the crypto side. And today he's leading the digital assets team at Nuvei, which is a leading payments platform for global businesses. So I was going to start on the questions. Maybe, Damon, since you just joined, I'm going to switch to you. And we'll kind of like break it from there.
Call me Eric. I'm just kidding.
So Damon, in Europe, I still get a lot of pushback. I'll tell you what happens. In Europe, I'm told we have SEPA, open banking, cards everywhere, and that these stablecoins and crypto don't really solve a problem, or solve a problem that doesn't exist. I see you're running the digital assets team for Latin America. I also saw on your LinkedIn profile that you've traveled 50 countries in 2 years, so maybe that gives you a bit of a different perspective. How would you respond to the idea that crypto payments or stablecoin payments don't resolve much? And maybe, also introduce how Nuvei fits into that.
Yeah, no, it's a great question. And sorry, guys, I finally was able to get in with sound and video. So yeah, I think that's exactly it. I think, if you are only thinking Europe, maybe you're right. There's real-time payments have been live and well accepted in Europe for a long time. And when you're especially within the European Union, there's law that is made in The Hague, and the other 42 countries follow suit. It's when you go cross-border and when you go abroad and you are in kind of the global south that you really see the power of stablecoins, right? So right now I'm in Medellin, Colombia, and right next door we've got Venezuela. We have Argentina in the south, and massive crypto adoption in Brazil. And the first thing you do when you get paid in Venezuelan bolivares or Argentine pesos is you buy dollars. And many times you don't have the liquidity or even legal ability. In Argentina, you're only allowed to buy 200 USD per month. So what do? You buy digital dollars. You get all the same benefits of or digital euros, right? You get all the same benefits of a fiat dollar, but with the capability to move those funds, hold those funds, and spend them, ideally with a credential. So you don't have to then spend again on transactions for off-ramping. In terms of payments, and I'll cut it there, is I mean, we kind of call it the stablecoin sandwich. When you're moving funds cross-border, the most expensive thing is to move money cross-border, as we know, coming from payments. So if you can do that faster, cheaper, more securely, and reduce settlement time, there's multiple benefits that stablecoins bring to the table that you don't get through standard real-time payments.
And so then going back to Rivai, you as a merchant, and also we were discussing that usually gaming companies or in that space of the games and digital content are the first ones to adopt new payment methods. But I'm just curious to know what were the main reasons for adopting crypto and stablecoin payments.
Yeah, I think it's basically the payment cost. Crypto has a very efficient, the payment cost is very low, and our gamers basically they are very price sensitive, and yeah, and also they were the early adopter of the cryptocurrency, and they have a crypto balance. So that's the reason that actually we enable it for the people to top up, for our Razer user to top up their Razer wallet. That's one. And at the same time, actually, we integrated the crypto payment, enable it to integrate with our game partner. And as Damon mentioned, actually, we noticed that Latin America is the primary volume in our Razer Gold that use stablecoin and cryptocurrency. I think it's because of the government there. They have a tight currency control, the foreign currency control. So the user basically, yeah, they love the gamers. They love to use cryptocurrency basically as a payment method. We also have a case that actually use a increase in the stablecoin usage for business to business. This particularly from our Razer reseller. So that actually the adoption of the for us to accept our reseller to pay us in the stablecoin, it come from our reseller, because using a normal bank transfer, because as a reseller of Razer they need to put in a deposit into their account so that they can resell our Razer digital pin and all other game pins. And using a bank transfer, it takes a longer and unpredictable also, like when the money will arrive in our into their account. And also the cross-border charges is ridiculous. It's expensive. So that was the one that prompted our reseller, like, you guys, Razer, you guys have to accept the stablecoin. That's currently what we already done that basically. Yeah, and we see that the growth, it will ramp up.
So Rivai mentioned that there's, on the B2C side, there's this both a marketing reason, the segments and the geographies, and then there is the efficiency aspect, and then he mentioned the B2B aspect. So I was curious, with Eric, you see demand from thousands of merchants and different, even across different industries. I was just trying to think, like, what are the main use cases? Is it what Rivai was mentioning? So like accepting the stablecoin payments online, or are there different business models? I'm thinking of B2B or intercompany flows or other models. Damon mentioned the stablecoin sandwich. I saw that you, on a post on LinkedIn, you mentioned stablecoin toast. I would, as an Italian, I'd call it stablecoin pizza. Maybe there's some different business. What are the different use cases and that businesses actually use?
Yeah, so on our side, we're seeing different type of use cases. So exactly the case of Razer Gold, like e-commerce merchants offering the option for people to pay with stablecoins, or more generally in crypto. So that's a big use case that we're seeing with merchants across the spectrum. For instance, we're in the luxury segment, we're working with Farfetch, for instance. We in the travel industry, we launched with Trip.com as well. So now you can buy your next flight ticket using stablecoins. So that's the e-commerce side of things. What we've been seeing also more and more is on the B2B side, more and more industries doing cross-border payments using stablecoins, because so what we've been seeing, for instance, Chinese exporters to Africa, and the problem is that for many African importers, they're having a hard time to source US dollar, and it's easier for them to get access to stablecoin. So what happens is that we're getting the stable coins from the African importer, and we are paying Chinese yuan to the Chinese exporter. So that's been a use case for B2B. We're seeing more and more. The other use case we've seen also fairly B2B in terms of use cases are payments to freelancers. Today, a lot of freelancers, whether they're in Argentina, in Africa, in Bangladesh, or whatever, they prefer to receive directly their payments in stablecoin instead of their local currency. So that's also something which we are seeing more and more demands from freelancers across the world. Happy to discuss my contrarian views on the stablecoin sandwich. I believe that there's maybe a bit too much hype around that, and it's not meant for every corridors. I think that if you're trying to send between euros from euro from one side to US dollar on the other side, if you're going through stablecoin in the middle, it's probably not going to be faster or cheaper. It might be actually the opposite. So what we're seeing as more interesting is that it's when you have one leg who has stablecoin and the other leg who doesn't need stablecoin. Because if I'm a business in, say, in the US, in Europe, I don't need to hold stablecoin. It's for me, it's so easy to hold US dollar that why on earth would I have USDC instead of keeping my money at the bank at JP Morgan? So for me, I'm seeing a world where there's going to be some people who will want to hold stablecoin and some who don't really need that. So that's why that's the kind of future I'm seeing.
Great. And Irina, you're looking at these crypto transactions. You're not looking at them probably like one merchant at the time. You can just see like the overall flow of what is of how money moves across networks, across different sectors, jurisdictions, etc. So from that point, where do you see stablecoins already functioning as a real payment instrument in legitimate commerce? So what are you seeing?
Yeah, so stablecoins, they, let's say, didn't win because they were innovative. They won because they solved payments, right? So from our system-wide visibility at Crystal, across chains, issuers, merchants as well, and some jurisdictions, we already see stablecoins functioning as a genuine payment instruments in legitimate commerce. So if to speak about where exactly, it's cross-border, B2B, and treasury flows, where speed, predictability, and 24/7 settlement matter more than branding, right? Also, what we mentioned here, merchant checkout and e-commerce, where stablecoins sit invisibly behind familiar UX. Also, what Eric mentioned, payroll, payouts, marketplaces, especially for global and on-demand workforces. Remittances and last mile payments where traditional banking is slow or expensive. Also, what we should mention here, we already see stablecoins functioning as real payment instruments in some legitimate commerce, such as OTC desks, crypto ATMs. OTC desks use the stablecoins for fast settlement of large trades and treasury movements, while if we look at the crypto ATMs, we rely on them for instant on and off ramp that allow actually users to convert value to cash without banking delays. So if, just to sum up, to make it like the key insight is simple here, that's when they stop being crypto, and start being payments. That way, a stablecoin can be really useful for all businesses.
Great. And so, I mean, it's obvious from this first round that, that crypto and stablecoin payments are actually starting to be seriously adopted. But I think that also for the audience, it's kind of interesting to really start understanding how this whole thing works. And so I was going to start from Rivai. If you can just, walk us through a second what it looks like from a customer point of view on Razer making a purchase with crypto. What kind of experience? How does this work on your end?
Yeah, actually, the user journey is quite similar, basically. The first thing that actually when we integrate the crypto payment was actually all our crypto payment is actually integrated through Eric through AAA. The user journey is quite similar. These days, basically, the most popular transaction on Razer Go is actually done through the web shop. Basically, the gamers can play the game whether it's on the PC, on the mobile, and then when they come to our Razer Go site, they key in their gamer's ID. Basically, they come to the product page of the game title that they're playing, and they can make a purchase of their in-game item. They log in using their gamer's ID. They make an in-game item purchase and then choose various different payment options, including crypto payment. And the user journey actually is pretty much the same, like whether they use like a local mobile wallet, card payment, and it's when the minute they click and then they will be directed to pop up into the crypto wallet basically. And so one of the sometimes the one that take longer or what the user concern is about the gas fee, right? How much is the thing that's charged? But these days, the crypto portal, I mean, like a Binance Pay, Crypto.com, Coinbase, they all also integrate the payment option.
Okay.
And they pretty much absorb the gas fee, and the transaction actually can run.
So for the less technical audience, we have what Rivai was mentioning, that with certain cryptocurrencies or certain networks, you might have a larger fee to pay. And I imagine in the gaming sector, maybe not every purchase is very big. And so the fee is a concern, but you're saying very popular are these kind of, let's say, off-chain payments where it happens directly from the exchange that the cryptocurrency user is actually using, like Binance or Coinbase, etc. And so, Eric, I was thinking, so a company decides to accept crypto, and what do they need to look for inside a crypto processor? What is going to be the criteria of selection? No, is it certain coins or networks that are accepted, or licenses, or regulatory aspect? What should a merchant be thinking of?
There's obviously the whole coverage in terms of wallet supported, having many stable coins, and especially on many different networks, many different blockchain. That's key on the technical part. Probably what we're seeing from potential merchants who are interested in the adding stablecoin payment is usually everything related to compliance, regulatory concerns, because there's always a reputation risk associated with adding the pay with stablecoin payment option. So you can be seen as innovative, but also some people might be concerned of, like, is there additional risk and so on. So that's why I think it's very important to look for a partner who is duly licensed and licensed for handling crypto payments, because crypto, even though there's now like the travel rule, there's different checks, but it's true that the AML, the money laundering risk, or the terrorist financing risk are higher because you don't have all the same systems that are in place in the traditional banking system. For instance, just to give an example, what we're doing, and that's something which is mandated by regulators, is that every time we're receiving stable coins in our crypto wallet, the first thing we're doing is that we're using some blockchain analysis tools to make sure that those assets are not coming from some kind of illegal sources or are not sanctioned by OFAC, all these kind of things. So we're able to detect and block in real time all those bad transactions, so that people are not using us/our merchants to launder coins which would come from some illegal activities.
So we're discussing, what a merchant should be looking for, but then it comes to the point of actually, let's say, in the process to integrate. So Damon, you're operating a global payments platform that has also other different payment methods, right? So let's assume a merchant comes to you and says, I want to add these stablecoin rails or stablecoin payments. How does that technically happen? I mean, from a merchant perspective, what teams need to be involved? Is it complicated from a technical point of view, or is it just like switching on something? I'm just curious to know how that actually works.
So I mean, I think no, it's a great question. I think there's a few. We separate it into kind of separate verticals that work congruently, right? So if I would say the product that we have the most demand for right now is from both existing merchants and new prospects is stablecoin settlement, right? And these are many times web 2s, right? So these are traditional merchants that are usually based somewhere else. They have their treasury maybe in Cyprus or Caymans or Bahamas, and so they're settling abroad in a different market than where they're accepting payments. And so usually we have to take traditionally we have to take fiat currency, settle in local fiat, and convert to dollars, and then send abroad, usually by wire. So you enter then stablecoin settlements, and you can go many times. The merchant is already, or the customer is already paying in dollars. So then you don't have to then convert to local fiat. You can just settle directly through Visa and MasterCard. Both Visa and MasterCard have, for example, Circle Mint accounts where they can mint their own USDC. Once a merchant is then accepting stablecoins, they need somewhere to put it. So we either open up a wallet or provide them with a custodian. And finally, as many of you have alluded to or mentioned previously, is then you need to pay remote workers or pay suppliers or pay providers. And we're facilitating those cross-border money movement for them once they have USDC or USDG or whatever the stablecoin is, to then utilize that and be able to facilitate their normal business processes, but just doing it with a digital dollar or a digital euro. So I don't know if that answers your question, but we kind of separate it into, so we have five real verticals within Nuvei, within digital assets, 5 kind of product offerings: on and off ramps, pay with crypto, stablecoin settlement, crypto card issuance, right? to be able to pay
Yeah.
with to traditional merchants with stables and on and off ramps.
And so, Irina, no, these flows are actually, so they're real volumes, and Eric just mentioned the importance of compliance and avoiding money laundering through these payment systems. What do merchants or PSPs need to get right from day one in terms of compliance and regulatory perspective in order to avoid headaches? Maybe also interesting, Eric mentioned some technologies where you can track the transactions. Maybe you want to explain a bit of that too, which is, I think a lot of people are not aware of.
Sure, yeah. Eric actually partially answered the question. So payments scale faster than risk until they don't. That's uncomfortable truth, let's say. And once stablecoin payments move from pilots to real transaction volume, the biggest mistake businesses make is treating risk as something they can add later, right? So in payment later is already too late. And from day one, responsible businesses need three things: clear definition of their role in payment chain, real-time visibility into who they're paying and who is paying them, and controls that work without slowing down checkout, right? So it all includes obviously blockchain analytic tools, KYC processes in place, KYC tools in place as well. A good example, again, if to come back to OTC desks and crypto ATMs, which we see as, let's say, highest risk actors in the crypto field. So when stablecoins move from experimentation to real volume, the risk profile change overnight. And here OTC desks and crypto ATM illustrates this perfectly. So both are built on for speed and convenience. And OTC desk settling in stablecoins or even crypto ATM offering instant cash out works brilliantly until the volume increases. And then you start seeing patterns that traditional KYC alone or traditional KYC alone cannot catch. And when we speak about the volumes, just imagine in Australia, it's currently around 1,900 crypto ATMs. So when we look at the patterns, that's enormous amount. We can catch some patterns that are actually similar to TradFi, like structuring, layering, but also when we see that in crypto field and stablecoins even flows, smurfing, again, structuring, mule activity, big volumes of the mule activity, sanction exposure. Normally, crypto ATMs, OTC desks serves as a start or end of the money laundering cycle. Scam-driven cash outs, often across multiple small transactions that look harmless in isolation. So the businesses that scale safely are the ones that embed behavior-based monitoring from day one, what Eric mentioned, looking at transaction velocity, repetition, counterparty risk, and cross-channel patterns while keeping the user experience fast and simple. So we see that the lesson here is clear. You don't slow payments to manage risk. You design risk controls that move at payment speed.
Amazing. Thank you, Irina. So I'm going to move on a bit to the scaling part, and also how does this world of stablecoin and crypto payments scale? I'm going to start from Eric. I've been stalking a bit his LinkedIn profile. In one of them, he talks about stablecoins, and he says they're global from day one. Instant settlements, no cutoff times, no intermediaries. But then you go on to explain that companies still have many concerns, saying that we will have a real breakthrough only when companies can manage crypto like a real bank account. So what is, can you take us through the reasoning here and, explain what is the solution for this to actually happen?
Well, it's a global industry effort. We need to acknowledge that today crypto, stablecoins are they're still they are solving, as we said, a lot of problems for the emerging market, but the technology is still not super easy to use for everybody. All this notion of wallet, the question of gas fees that Rivai mentioned, all this kind of complexity is, and many people, hundreds of millions of people, are able to deal with that, but still, it's not as convenient as using Apple Pay. So that's where we should be trying to go as an industry. Today, some problems have been fixed. For instance, it was taking time to settle on the blockchain, like minutes initially, and so on. Now with more modern blockchain like Solana, it's instant. So all those problems are being solved one by one. And I think that's the trend which should continue. The CEO of Jeremy Aller, the CEO of Circle, takes an analogy I like, is that he's comparing where we are today with what was dial-up for internet compared to where we are now with broadband. And I think it's an interesting analogy.
Yes, for us that we're used to those 56K modems. Irina, from a security and compliance perspective, what needs to happen and where in the industry to see a supermassive company and end user adoption of stablecoin payments?
Mass adoption happens when trust scales faster than volume. So for truly large-scale adoption by enterprises and everyday users, the industry must evolve in 4 key areas. So first, fraud and scam prevention must keep pace with volume. Interoperability between crypto rails and traditional finance must mature. Also, governance and auditability must meet enterprise and regulatory expectations. And transparency without killing UX, especially for compliance and consumer protection. So stablecoins won't fail because of technology, right? That they all fail if risk management doesn't scale with their growth.
Rivai, so we've already said this, you're in the gaming sector, you've seen all sorts of alternative payments. We met when we were doing carrier billing. Do you think that stablecoin and even in more in general cryptocurrency payments are a niche, or are they here to stay? Are they gonna grow massively? What is your take as a merchant? Oops, we cannot hear you. Could you be on mute maybe?
What Eric said, it's keep improving every day, every week, every month. So it's going to grow bigger. It definitely will be a lot more efficient. I see that as even though now it's still considered niche, but the volume actually can grow instantly big. Like I think I shared previously that I use the example of our new market, Razer market in Japan. At one time, actually, we have some issue with one of our main payment channel over there, but we surprisingly that a lot of our gamers in Japan use the stablecoin and the crypto payment as an alternative, and we can see that the surge of the volume growing quite big, like double, triple than the usual month. So yeah, so I think that when regulatory, the blockchain payment, stablecoin payment more mature, it will grow bigger and bigger, basically. Yeah.
And Damon, so you're leading the digital assets team within a wider payments company. What do you need to do to make that portion of digital assets just so much bigger within the payments company? Are you looking at like specific sectors that you want to address, or what needs to happen so that it's, you know, that digital assets part becomes bigger?
Yeah. Yeah, as I mentioned before, I think there's two sides, right? We're not seeing huge adoption with pay with crypto, right? That is a widget that we can add as an alternative payment method to a merchant's checkout page. But where we are seeing large adoption and where we're pushing for, I think, communication and marketing to our existing merchants is, so any merchant that's doing, you know, so think gaming, e-commerce, anything that's really kind of a cross-border merchant, so they're based somewhere and processing in another market, and they're settling in a third-party market, right? That inevitably, those flows, just by moving those funds cross-border via stablecoin, is going to be cheaper and faster. And when I say faster, right, I mean the real thing that we're piloting now with Visa is 7-day, 24/7 settlement. So no more weekends, no more bank holidays. Those funds that traditionally were just sitting in float, not being applied, not, you know, to business processes, are now being settled immediately. Additionally, I think the other kind of vertical that's emerging, and it's a little bit, we have to be a little bit careful in Europe about talking about yield-bearing stable coins, right? But whether you take a USDG, a US global dollar, and say, okay, you know, any of the consortium members get a certain amount of these of that yield, of that interest back, and then they can apply it to reducing payment costs or operating costs, etc., or as an additional revenue stream. Or you use, you know, there's other vehicles that you can invest. You can tokenize the stable coins and then invest those funds while they're in float. There's a few different flavors.
So Damon, you're already raising a bit of the next topic, because I wanted to get into
okay, I apologize.
No, that's great, because you helped me with that, because when the minute that you start talking about yield-bearing stable coins, etc., that immediately brings us to the Genius Act. There's the MiCAR, and I think that we should have some minutes about that. So this year, it was particularly interesting what happened in terms of regulation. Probably I'll start from Irina on this one. How is policy, let's say, shaping this industry, and do you see different regions taking different directions? Also, I'm thinking a bit of Europe and US, but there's probably different things happening at different regional levels.
Yeah, so we are seeing different regional philosophies, but one shared direction that stablecoins are moving from tolerated to regulated as payment infrastructure. So if we speak about MiCA, Europe, it creates a structured regime, including specific requirements for asset reference tokens and e-money tokens and associated authorizations and standards. Regulators have also issued guidance on how MiCA applies to activities involving non-compliant arts and EMTs, and that was a signal that business as usual is not acceptable if tokens don't meet the framework. And if we speak about the United States, so the Genius Act was signed into law on July 2025, creating, let's say, a federal framework for payment stablecoins and pushing the market towards clear issuer requirements and governance expectations. So different regulatory styles in one sentence. If to sum up, the European Union approach is comprehensive, market structure first, and the US approach is payment stablecoins clarity to unlock innovation, and both raise the bar on governance, control, compliance, obviously.
Rivai. So I'm thinking again from the end user perspective, no? So what can regulation get wrong that could ruin this payment method, no? So I don't know, is there some regulation or something that you'd see would be too much of a burden or obstacle to having smooth and frictionless payments?
Actually, the way I see it, like based on Razer Gold user that use a crypto, actually they will use a crypto payment, stablecoin payment to circumvent the regulator. I'm talking about country like Latin America that has a very tight foreign currency regulation, right? I mean, they're skirting out from that, and they use a stablecoin as a way, basically, to defeat the currency control. On our side, the Razer Code user experience in terms of using cryptocurrency is not really much affected by any regulatory thing, because what they're spending is actually for the game. They're not using it, the cryptocurrency, to pay to other user or transfer to other user, but it's more like spending it on the game, or use it to top up into their Razer Code wallet, which can be used to pay for their game content, basically. Yeah.
So basically, Rivai, I had two questions for Damon ready, but I'm going to go for the harder one because you actually raised it, which is the emerging markets. No, so what I see is that these stablecoin payments can start flooding into, or have started flooding into, emerging markets. We have some clear regulation in the EU and in the US. And what kind of Damon, do you see potential pushback from regulators in Latin America, et cetera, against the stablecoin payments?
No, I think quite the opposite. And there's another trend that we haven't yet discussed that is also starting to emerge, and that's local stablecoins, right? So these are stablecoins that are pegged to local fiat that help to enable on and off ramping, and give regulators and central banks confidence that this technology can be beneficial to them, and it's not just all based around the dollar and the euro. In terms of regulation, yes, I mean, MiCA, Europe was first and got MiCA passed. This year, US passed the Genius Act. And what we're seeing is that, Latin America, Asia, Africa, they're pulling kind of best practices from those regulations and forming their own that works best for their market. And I think, we had kind of this stablecoin summer, right? Where we've got Circle going public. You've got the Genius Act being passed in the US, and kind of the emergence, and you're seeing more flows of stablecoins than all of Visa and MasterCard, right? I mean, insane.
Yeah.
So it's here to stay, and you either innovate and build regulation around it, or you're out of the global marketplace. And I think a lot of these governments are adapting to that and building, as I said, their own regulation based on best practices that have already been passed.
And so, Eric, of course, I would imagine most of the audience is in Europe, and so there are these two things that kind of come to my mind. One is that today 99% of stablecoins are USD denominated. I see Circle making a lot of effort, and it's actually growing the amount of euro denominated coin, but it's still very small compared to the USD stablecoins. And the second is that it seems that the ECB is really pushing for this digital euro. You get the digital euro question. So will these stablecoins and the digital euro coexist, complement each other? Will it be a competition between private coins and government coins? Is the digital euro not going to happen? How do you see it?
Well, I think digital euro is a joke. It will take forever. It will be capped. You will not be able to hold more than 3,000 euros. I think that's something like this. And I think this number is still, and some people, some banks in particular, thinks it's already too high. I think it will require things to be fully KYC. So I think this is never gonna fly. What I usually say, if today someone would invent cash, central bank would forbid it. So I think the digital euro, from what I've seen, is going nowhere. I think so. The fact that euro stablecoins are not really interesting shows that there's not so much demand for outside of Europe. Obviously, again, because in Europe we have SEPA instant and everything, you don't need stablecoin for intra-euro payment because it works 24/7. So it's not solving any domestic problem, and globally the world does not need so many euros. On the regulation, I think MiCA, as usual with Europe, is over regulating stuff to an order of magnitude. So everything is always more complex and so on, and that's not helping. So I think it's important to regulate instead of forbidding, like what we're seeing in India or China or some other big jurisdiction. But over-regulating, in my opinion, goes against even the interest of Europe itself.
Great. So we're getting close to the end. I'd like to encourage for those who still have questions to submit their Q&A. We also have a poll, which is for the topics for the next session, so you can head to the polls and vote on what you believe are the most important topics to be discussed in the next webinar hosted by the papers. Maybe I'll just do one very quick 10-second, 15-second each round. So we're at the end of the year. We're getting ready for 2026. I'd like to ask each of my guests what was the most important event of the year in the sector, and why, what would be the implications going forward. I'm going to start from Irina.
So in 2025, we saw stablecoin usage hit record scale. So I think it was reported something around $4 trillion in stablecoin transaction volume between January and July 2025. That all reflects a real shift from pilot to production. And the implication for 2026 is simple from my side. With that volume, fraud, sanction exposure, right? We all remember the story with A5, A7, and consumer protection become front and end center. So the winners will be the companies that can scale risk controls as fast as they scale payments.
Damon?
Yeah, I would say the movement of stablecoins into TradFi, right? Right now, you're seeing, if you just take away the asset class, but just purely on the technology, and specifically on the payment sector, you're seeing large banks, global banks that are moving their B2B payments for customers on chain. And I think it's just inevitable because faster, more secure, many times cheaper, that trend is going to continue.
Rivai?
Well, on the Razer Gold side and stablecoin, on the crypto payment, we've been working enabling a crypto and stablecoin for a few years. We're working with the Eric's team. And in 2025, actually, we start growing a B2B of a acceptance of a stablecoin through our reseller. I hope in 2026, basically, we will get our game merchant that are willing to accept a settlement using a stablecoin, because we don't have that yet, basically. Yeah.
Okay. Eric, for you, what was the most important development this year, and what do you see going forward?
Yeah, the news I was the most interested in this year was the fact that JP Morgan did an interconnection with DBS, so the two large banks, and for using the JP Morgan coin. So it's not yet a stable coin because it's still closed door, but this can be a very interesting candidate for stablecoin.
Amazing.
Yeah.
So I'm gonna head off to the Q&A. Before we start with the questions, just a reminder of the paper's Web3 payments acceptance report, which should be in the handouts section. So I see this question from Mario Reichel. I hope I pronounced that correctly. How do you solve the issue? Wallet to wallet payment comes with almost no info, such as invoice number, deduction reasons, extra info needed for reconciliation, open items, or other scenarios like payment on behalf as custom in B2B. How is that resolved? Who wants to take this question?
Happy.
Eric.
Yeah,
Yes.
happy to take this. That's exactly one of the problem we're solving, as we're able to associate a payment with a blockchain transaction. And so meaning that for the merchant, for the business, if it's B2B, you want to receive a payment for $1,000 invoice with invoice XYZ, invoice number XYZ. As soon as the payment has been done, you will be notified that invoice XYZ was paid for $1,000. So that's exactly the problem we're solving.
Great. I see another question by Bernd Harnisch. I hope I pronounced this again well. Hi, thanks all for your statements. Very interesting. I have a question with respect to MiCA regulated stablecoins, like from AllUnity, SocGen, or Oddo. All of them say somehow the stablecoin may not be offered or sold within the United States or to or for one account to benefit of U.S. persons, both as defined in Regulation S of the Securities Act. So if I can't sell European stablecoins in the States and same vice versa, because they don't cross-comply with the regulations, how can we say that stablecoins are a global payments measured for corporates? That's a interesting question. Who wants to take that one? Okay.
I can take one. So as far as I understand, the question is like if stablecoins are geo-restricted and how they can be global payments, right?
Exactly.
So MiCA regulated stablecoins, they restricting US persons, isn't a failure of stablecoins, it's regulatory perimeter clarity, right? We see the same in traditional finance with funds, EMIs, and securities. In practice, corporates achieve global reach by using jurisdiction-specific stablecoins per corridor, European Union, US, Asia, just like local clearing today. Also, payment orchestration layers that route transaction to compliant instruments per counterparty allocation, right? Hedging and netting as treasury level, not at the checkout. And final, that stablecoins are one global coin. They are a global payment fabric. So that's how corporates already operate in fiat, and stablecoins are converging on the same model, just faster and more programmable.
Amazing. So I think that I've just noticed that we've arrived at the end of our session. We're already 1 minute out of the scheduled time. I want to thank the panel and everyone for joining. Thank the audience. I think it was really interesting. So thank you, everyone. And for the audience, please remember to download in the handout section the report of the papers. Thank you very much, everyone.
Cool. Thanks, guys.
Thank you. Yeah, thank you. Bye-bye.